Let me go back to what Jay Powell said yesterday. He said, we're going to do whatever it takes on inflation, even if we risk going into recession. Which is the bigger danger right now?
Well, they're both dangers. But it seems to me that there's no doubt the Fed's going to keep pushing until they get some progress on inflation. I think we're going to have a financial shock somewhere. We always have one in a tightening cycle. And the economy is going to continue to weaken. And some mosaic of that will cause the Fed to change a little bit. Maybe they'll say no more 75s. Or they'll do a 50 and they'll do no more 50s, they'll do 25s. Or maybe they'll say, we'll skip the next meeting, we're still tightening. But they're going to keep pushing for sure. But I think there's a pretty good chance now, as the data comes out today, in addition to the past few months, that inflation has started to come down.
Well, that was my question. Are they making progress? Because I saw your note from today, and you noted that PCE is not as hot as the CPI was.
Right.
Five-year is coming down some. Right. Are they making some progress, or is it too soon to tell?
It's probably too soon to tell. But, my job is to try and go where the puck is going. And not that I'm a hockey player, but like your colleague. You mentioned inflation expectations. They're down about 100 basis points. Gasoline futures are down about 70 or 80 cents. And commodity prices today are down decisively. Like nat gas is down a lot. And so commodity prices have come down, including the food complex. And then we survey retailers about pricing power. We've been doing it systematically for over a decade, and that's dropped like 10 points in the past 3 weeks. And they have excess inventories, and so they're having to do some discounting. So if I may elaborate one more point.
Please.
Probably 6 months ago, I always collect anecdotal evidence, but I had two people in 2 days tell me that they were having to pay up to $25 to get a dishwasher, one in Minnesota and one in South Carolina. And I know, wow. Last night, I had a guy tell me who does light manufacturing in Florida. He'd gone from 14 to 15 to 16 to 17 to $18, and now he was getting workers back in. So I don't think wages are going to go down by any means, but I think we might be seeing some light at the end of the tunnel here on inflation.
Are we worried about consumer spending at all? I mean, is that what we want it to come off? Because the consumer spending numbers were down, for example, the numbers today, and that's sort of a trend right now.
Yeah. So you know this story, but I'll say it again. Income in today's numbers was up about 0.5% or 6% annual rate. And it's been running, it's probably up 11% year on year, nominal income. Now, it turns out that inflation is like 7% or 6%. And so the income is there, but it's all being eaten up in price. So the real that's left over is only like 1 or 2%. In this latest month, it was down slightly. But as long as the income is there, I think the spending is there. And if I could continue to be on your program or your wish list.
You're always welcome.
I've studied this so much. We've never ever had a recession without an inverted yield curve. I go back to 1929. Not that I was there, but 1929, and then Japan in 1989, and 2007, the yield curve inverted. And we get a recession. And now the yield curve is, you got bond yields at 3 or something and Fed funds at 2 or so. So you still got a pretty steep yield curve.
One of the things that's different this time is the pandemic. We've never had a pandemic like that, certainly in 100 years. And part of it is the supply shock. One of the reasons I really follow all your research so carefully is what you say about the supply chain. Yeah. And what are the data showing us? Are we starting to unravel the knots in the supply chain?
Some. Slow process probably. And there's still... like this auto inventories are still low. But I'm glad you brought that up because it's a point I really would like to make. We had the pandemic. We had big fiscal stimulus. We had QE, zero rates. And we had the fastest money growth in 8 decades, 30%. And when you get extreme like that, you're going to get inflation. And you happen at the same time to have bottlenecks. So it's a real bad cocktail.
Well, one of the things I saw in your June report was our money supply growth is slowing down, and Europe's is as well. China's going the other way.
Yeah. So China's really an outlier here. I'd like to continue to discuss with you. Money growth was almost 30% a year ago, fastest in 8 decades. Now it's down to about 6, and it's been flat probably for 3 months. I don't know when the last time that was, but as Milton Friedman pointed out, the Depression occurred because we had a contraction in money. So the Fed doesn't really report on money. Maybe they watch it, I don't know. But I'm concerned that if money goes negative, which is starting to do with quantitative tightening, that we could have a much worse economy than I'm forecasting.
So your concern is we may be slowing down the money growth too much.
Oh, listen, we're already there.
Yeah.
I think it was unchanged in April, unchanged in May. And with the data we have on bank deposits, it's probably unchanged in June.
One more, Ed, and that's the strength of the dollar and exports. Because the trade deficit has really been up there because we started importing again when we came out of the pandemic. We don't seem to be exporting as much. How big a threat is that?
Exports are okay. The trade numbers improved recently. But I'm watching the dollar really carefully. The dollar trades a lot on technicals. Mm-hmm. Because it's so hard to forecast. And it's about to make an upside breakout. It's like that close. Now, that also puts downward pressure on inflation. You know, when the dollar goes up, it pushes down commodity prices, which may be one of the things that's pushing down commodity prices now.